Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, US stocks and bonds jump after inflation does fall to 3.2%. As well as that, hospitals in the north of Gaza stop functioning as a humanitarian crisis does deepen. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. But yes, the first article to talk about is US inflation. Now, US inflation fell more than expected to 3.2% in October. And this is the first decline in 4 months, with Treasury yields and Wall Street stocks climbing. Now, this is a fall from the 3.7% figure that we did see in September and below the economists' expectation of 3.3%. Now, US inflation is actually something that we've been going over quite a lot recently, largely as a result of the Fed's monetary policy and how it's been positioning itself around the current levels of inflation. Now, the US economy is actually, seemingly being one of the bright spots within the world economy at the moment. And the Fed has held interest rates for, the past two, central bank meetings. And whilst at one point, near the first point where they did hold rates where they are, it was predicted that rates were, going to be raised by 0.25% by the end of this year. But as we continue to see inflation fall, the chances of that fall ever slimmer, and we're actually more likely to start seeing rate cuts before any rate hikes. And there's a multitude of factors playing into why inflation is now coming down, but we'll get to that in a second. Now, the yield on the 2-year Treasury bond was down 0.2%, whilst the 10-year yield was down 0.17 points. Was down 0.17 points. Now, the S&P was up 1.9% and the Nasdaq 2.2%. Now, by S&P, we do mean S&P 500, with the dollar also down 1.4%. The large reason for this being, as inflation does fall, predictions for, the rates set by the Fed, is kind of changed and changes. That was poor wording. But yeah, ultimately, traders start to price in the rate cuts, which are more likely when we are seeing those lower levels of inflation. Therefore, if rates are lower, people are earning less interest on their money within the savings accounts. As a result, hot money flows out, and therefore, the price of the dollar will fall, and that's why we now are seeing the dollars fall. But these figures, it is now seen that this will comfort the Fed enough to know that rates are high enough. And this has been something that we've been talking about a lot, largely as a result of, Jerome Powell's rhetoric around rates, looking to be something that are being held for a good, some good time now. But as we are seeing, the falls in inflation, we are now pricing in, those rate cuts, which are, presumed to happen earlier than expected. With the expectations, with these figures coming ahead of the expected fall in inflation for the UK this week as well. So it does seem that, economies across the world, within the Western world, are beginning to be expected to see that decline in inflation. Obviously, inflation's been declining for a few months now, but we haven't been seeing these significant falls like we have seen now with the US inflation figure. And so seeing this happen worldwide is likely the root cause. The root cause of this is likely as a result of those falling energy prices that we've been talking about in our market briefings, where we go over the charts, with expectations for the UK being 4.8% for inflation, which is far below the 6.7% figure in September. So nearly a 2% decrease in the level of inflation expected year on year. Now, Inflation also fell in the Eurozone, falling from 4.3% in September to 2.9%. And this is very, very, very significant when we consider that, President Lagarde of the ECB was only going to start consider rate cuts or reducing the amount of time that rates are held where they are. Once she did see, the levels of inflation fall below that 3% mark, as after all, the wide central bank kind of inflation target is usually 2%, and therefore anything falling within, the kind of, 1% bounds of that 2% figure, we're likely to start see monetary policy kind of accommodate to keeping inflation at those levels. Therefore, we can now start to expect rate cuts sooner than previously expected for the ECB as well. Now, the falls in inflation seen across the board reflect falls in energy prices, with lower levels of inflation increasing the speculation that rates will be kept still. Now, investors are predicting the Fed to cut interest rates by 0.5% in July, and core inflation also fell from 4.1% to 4% year on year, and this is the most important to the Fed, of course. And this is why the core inflation figure is so important. The core inflation figure has been holding where it is for quite some time, as it does exclude the volatility of food and oil prices, and therefore seeing core inflation also start to come down, we're very likely to now see the Fed loosen its policy somewhat, or loosen its rhetoric on its monetary policy. After all, we were hearing even quite dovish tones from Jerome Powell for the Fed, as well as quite dovish tones from President Lagarde within the ECB. So more dovish tones across the four. That it will not be misled by a few good months of data. And this was, recent rhetoric from Jerome Powell, warning that just some good inflation data won't mean that we just change our monetary policy on a whim. And this is why it's important to keep your eyes on this. Understand that, although we're seeing inflation come down, this isn't going to drive monetary policy in one way all of a sudden. Signs of price pressures growing already. So the chance of inflation just going away are still quite slim, and we do need to keep an eye on it still. We'll come to the charts near the end where we'll look at the dollar and US indices and possibly oil as well, so wait around to see that. The next article to talk about though is hospitals in Gaza. Now, all but one hospital in the north of Gaza has a lot largely due to its relation to affecting specifically the gold markets, as well as the dollar, of course. And this is because gold acts as that safe haven commodity in times of crisis. People put their money into gold to make sure it's safe, and that's why we're now seeing the rise in gold following the October 7th Hamas attack, where over 1,000 civilians were massacred. Now we are seeing the effects of that on markets through gold specifically. So covering these topics such as the Israel-Hamas war is so important to understanding why gold may move one way. But of course, Israel did engage in a ground offensive invasion into the enclave of Gaza, and we've seen this humanitarian crisis evolve as a result of the encirclement around Gaza city deepening, with the lack of supplies obviously affecting the civilian population in an act to try and starve out the Hamas leadership and the Hamas troops from having the fuel to fire rockets, from having the energy to keep bases running underground, and restricting the food and water supply so that they can't stockpile it any more than they already have done within the tunnels where they're based. So this is why we're now seeing this humanitarian crisis deepen, with the severe lack of fuel supplies for hospitals causing many to stop operating. This was a big fear for many Western civilians and leaders is the idea that, this conflict does begin to affect, civilians, innocent civilians, greatly. As well as that, the IDF has restricted food and water supplies, worsening the situation for civilians, of course. Now, doctors are reportedly operating on moderate level injuries without anesthesia, with, levels of anesthesia running at all-time lows. As a result, we're not seeing, that adequate treatment of patients, with 32 patients, according to the UN's humanitarian board, dying in Shifa hospital due to no fuel. Now, Israel intends to destroy Hamas, which apparently has bases of operation under the hospital, and therefore, this is a large part to why we've been seeing, the humanitarian crisis worsen within Gaza, is the embedded military infrastructure within civilian areas that we have been seeing. There is no clear, military infrastructure within Gaza. It's all embedded within, civilian infrastructure, and with the, IDF claiming that, military infrastructure is embedded within the hospital as well. Western leaders are warning against, a gunfight, battles to rage within this kind of humanitarian safe point, really, for most people within the hospital, of course. Now, the hospital has denied those claims, instead claiming it is sheltering injured individuals. Now, Western nations in response have been pressuring for restraint in hospital strikes and attacks, with this ground operation following, of course, the massacre of 1,400 Israelis on October the 7th, and it's now believed that a hostage held by Hamas has reportedly died following an Israeli airstrike, as well as, with, according to those within the enclave, with now 11,000 people dead in Gaza as a result of airstrikes and the ensuing ground operations. And according to those in the enclave, many of the hospitals are full of rotting bodies with rubble, with no fresh food or water anywhere. And an estimated 200,000 Gazans have fled the north of the enclave following the operations. As we do know, the IDF has opened up a humanitarian corridor, allowing Palestinian civilians within the city of Gaza to exit through and into the south of the enclave. That said, we have seen, friendly fire from, it's believed, Hamas within the Gazan city, shooting at, the kind of humanitarian corridor in a bid to keep these civilians as human shields. And yesterday, the US and UK announced sanctions on Hamas individuals and entities. So keep your eyes on this as the story does develop. It'll be affecting, as I said, markets such as gold, as world tensions do increase as a result of the conflict. That's all to talk about on the articles, though. Next to talk about, of course, is the charts, with the first, as it turns on, with the first kind of asset to talk about being, of course, US indices, as they seemingly do go bullish. Now, yesterday we were talking about how the US indices, especially the US 30, was pushing above this trend line now that we had seen price hover around for quite some time. It did break above it, continue to push higher, and going into yesterday, seemingly following the US's inflation news, as people began to price in lower interest rates, we did see US stocks, in specific, the US 30 taking a strong move to the upside. So it's clear now that the US 30 has broken structure, moved out this bearish trend line, and is now on the move to the upside. So it'll be important to see now whether, the US 30 can make even further gains to the upside, or in fact we'll see a small retracement before continuation to the upside. Now, keep your eyes on this, as of course, with the US inflation data today, this greatly affected price, and so keep your eyes on any fundamental news, as that does affect the markets. Next to talk about, though, is the dollar, which once again was impacted just like US 30, but by the low soft US inflation data. So coming in below expectations did cause the dollar to take a significant rollover to the downside. We had spoken about this 50% Fibonacci mark. Price was reacting to it, moving in a bearish fashion away from it. But following the data release, we have seen a continuation of that price movement with a significant fall off to the downside as a result of that data release. We've now even pushed into this old area of liquidity that I've highlighted back here, that we were looking at some time ago, and price has pushed into this level. It's extended past the Fibonacci extension level, and therefore we could be expecting somewhat of a retracement following that data release. But of course we'll have to keep our eyes on the way price is moving, so definitely keep your eyes on this. Next talk about though is Euro USD, which was able to bounce in a very significant fashion from this area of liquidity that we've highlighted here, where price was sitting for quite some time. We highlighted that short-term downtrend despite price existing within this long-term uptrend. Price was bouncing off that area, bouncing off this area of liquidity, and following the inflation news today, obviously the dollar did start to fall, and it was beneficial for the euro despite their inflation news, and we did see the euro take a significant move to the upside, actually breaking its bullish structure though. So it'll be interesting to see how price will now react with this kind of upward structure, this bullish structure, which obviously price has interacted with before. So the real question will be, what will price now do? We could be looking at a retracement, but quite possibly we haven't seen the top of it yet. So keep your eyes on this. Next talk about though is pound yen, which for some reason isn't loading. But as you can see right here, pound yen has had some significant moves to the upside, with just yesterday, price still sitting around and just above this area of structure, this area of resistance, which price had just broken above. But it does seem that pound yen has found the liquidity to continue that move to the upside, and as a result we have seen that strong push to the upside, breaking its prior highs of 186.75 and reaching even levels of 188.28. But what will be interesting to see now is whether we will see that retracement. As you can see over here, we are overbought on pound yen. Price, you can just look at it, it's very overextended. We're likely to see that retracement, but obviously it'll be interesting to see how price does react to today's inflation data released for the UK, as this will be affecting the way people perceive the UK's monetary policy going forward, which is why it's so important to keep your eyes on. As well as that, we do have quite a bit of Japanese data coming out today, but we'll talk about more of that at the very, very end. So make sure you stay around to see that. Next to talk about though is USD JPY, which, following the dollar's decline, did see a significant sell-off. We were reaching, these prior highs on USD JPY, reaching this strong area of resistance, but we have now seen that significant sell-off to the downside following that fundamental news release. So that's why it's important to keep your eyes on for USD JPY. We're kind of returning to this area of structure, so keep your eyes on that. Next to talk about though is Bitcoin, which had seen a significant amount of bullish momentum in the recent weeks and months following increased Bitcoin ETF speculation. So keep your eyes on on Bitcoin. Lastly, to talk about on the charts though is gold, which obviously did, the drawings aren't showing up, I'm sorry guys, but ultimately gold did tap this significant area of liquidity that we had highlighted. They are now, as you can see, this significant area of liquidity that we've highlighted prior, it was in line with that 38.2% Fibonacci area. Even when price was up here, we were talking about price coming down and interacting with this level. And following the weak dollar news today, we have seen, gold continue that bullish move to the upside. If we are looking for gold to continue and move to the upside, we'll be looking for more dovish Fed news, so more ideas that the Fed will drop interest rates sooner. And also, we're looking to hear more around possible regional escalation in relation to the Israel-Hamas war. That's all to talk about in the charts, though. Lastly, to talk about, of course, is the economic calendar, where we have lots of data coming up to date. I'm sorry that the camera's frozen. I'm not sure why it's doing that, but price is loading up here. I think we'll skip the economic. Oh, well, we have Chinese industrial production and retail sales and unemployment rate from China, as well as that we have Japanese industrial production and balance of trade figures coming out. Along with that, we have French unemployment rate and the French inflation rate, as well as that we do have the UK's inflation rate, as well as the Italian inflation rate. I'm sorry, I don't have it up here, but it's not loading. Oh, it is now. As well as that, we will have the Eurozone's balance of